Hey, how you doing? Austin here. In this video, we're going to be talking about the 3 best growth stocks that are out there right now. I guarantee you, these are growth stocks that are not on your radar. I have a very specific system that I use to pick these stocks. And I'll tell you up front, these stocks are hitting their 52-week highs. They are trending. They have major momentum behind them. And it's a really cool way to just grab onto that momentum and just ride that momentum up and make money along the way. That's why I love momentum growth stocks. And those are the type of growth stocks that I bring you. And these are 3 companies that I guarantee you're not on your radar. Nobody on YouTube is talking about them. And that's why I bring them to you, because frankly, I want to help you make more money in the stock market. That is my goal. So that's what we're going to be covering today, 3 of those stocks. I'm even going to show you an example of a stock that you don't want to invest in. And I'm also going to talk to you and show you exactly how you get into the stock, how you set trailing stop losses, when you buy, when you sell. We're going to cover all that for all these 3 stocks. So stick around. This is really some cool stuff and you're going to enjoy this. So before we get started, this video is for entertainment purposes only. Before you buy anything, do your own due diligence. Make sure the stock is a right fit for you. If you're brand new, you've never seen me before, consider subscribing to the channel and drop a like on this video if you would. I bring you these types of videos about every couple of days, as well as I bring you update videos on major companies out there like Tesla, Palantir, all the EV players, you name it. I got those videos on my channel, as well as the occasional penny stock video. I bring you that as well. I'm a huge fan of penny stocks if they're the right ones. Okay, so let's get started, and I want to go now show you 3 of the best growth stocks that you've never probably even seen right now. Let's go take a look. Here we go. Okay, so I'm going to throw up a graphic here to show you what we are looking for when we're looking at getting into these 3 best growth stocks. Now, the chart on your screen is an example of a company, a stock that we don't want to invest in. I always like to start off here. I think it's a great way to look at it is, hey, let's start with what we don't want, right? So on the graphic on your screen, I'm going to cover this. We want stocks that are hitting their 52-week highs. You can see from this this stock chart right here, this stock is absolutely not hitting its 52-week highs, right? We want stocks that are trading above their 50-day moving average. Okay, well, the green line right here is the 50-day moving average. You can see that this stock is trading below its 50-day moving average. And the third thing we want is we want the stock to be trading above its 200-day moving average, which you can see from this chart right here is the blue line, okay? So this is an example of a chart of a company, a stock that we don't want to invest in right now, because you can see obviously the stock is trending down. There's a lot of downward selling pressure on it. I don't know the news around this or what's going on with this particular company. In fact, you notice I'm not even showing you really the company because it's really not relevant what the company is for this educational purposes. It's relevant is that to understand that this is the type of chart we don't want. Okay, so some other points I want to illustrate here is you notice as the stock again is trading below its 50-day moving average, but you also notice as it was trending down, it had some bounce backs up where it started trying to bounce back up, right? Well, also, guys, what happens when when a stock is really trading down and it's starting to trend, people start to get scared and they want to get out of it. Okay, so immediately when this stock maybe rebounded a little bit here, maybe somebody had bought up in here, they see this rebound and they're like, man, I want out, and they start to get out in droves, which applies more selling pressure, pushes us back down, and again, we're going back down in a downward spiral, things of that nature, not to mention maybe even short sellers that are on top of this stock, etc. Okay, so you can see that we've just got a lot of selling pressure. Now, in this example, the stock is starting to bounce back up, so maybe something positive is going on, but we don't really want to invest in them. Now, another scenario that I do teach occasionally is that as a stock passes its 50-day moving average, you can set triggers and know kind of when something may do that. You can maybe invest in it when it does pass its 50-day moving average. That's another way to catch these stocks and ride them up. Okay, so this stock's getting close to maybe its 50-day moving average. Again, educational purposes only. This is the type of chart stock that we don't want. Okay, so now let's go take a look at our first stock that I do want to talk to you about. Okay, so the first stock is a company called Adient PLC. Ticker is ADNT, currently trading at 48.66, up a little bit today. Okay, so you can see from the chart, much different, right, than this one. Okay, much different chart. So Adient, you can see, number one, it's trading above its 50-day moving average, the green line. It's obviously trading above its 200-day moving average, and you can see that it's got a very nice trend line. Now, I like to point out, see how right here I dipped down below its 50-day moving average. If I did own this stock, that's one of our selling times. If a stock trades below its 50-day moving average, I want you to sell it. Okay, so let's say we bought it here when it rode up, and then if it hits 50-day moving average, I want you to get out of that stock, because again, that's a trigger, right? Now, also I'll point out another thing you want to put into place when you're doing momentum trading is, let's say we did buy here at 38.90 and we rode it all the way up to 46 or whatever that may be. Another scenario, just to protect your downside risk, is I would love for you to put a trailing stop loss order on the order when you buy in. Okay, so let's say we bought in at, say, 39.38 as an example. Maybe put in a trailing stop loss order for that trails at 20% behind whatever you bought in at. Okay, that way you're always protected from downside risk. And then when it started to drop here, as it dropped up, when it let's say it hit its high of 48.41. Well, when it immediately hit a 20, and you can see it was dropping. When it started to drop, that 20% trailing stop loss order would have kicked in, and it would have protected your profits that you had built in. Okay, and then you would have potentially wrote it down, going, man, okay, Adient, I see it's dropping. My stop loss order kicked in, and it hit its 50-day moving average. Austin told me that if it drops below, I want to, obviously you would have already sold because your trailing stop loss order kicked in. And then once it starts to bounce back up above its 50-day moving average, you can buy back in. So right here, you can really, you watching the stock, you're like, oh, hey man, it went above its 50-day moving average. I could buy in maybe on this day at 38.50 or whatever it was, and now you're starting to ride it back up, and you can see that it's trending up nicely. So the cool thing about momentum stock investing is that you tend to get higher highs and higher lows, right? Also, I have people that channel these stocks, so they'll buy in the channel. They might buy here, sell here, buy here, sell here. If you really get to know a stock, you can absolutely do that channeling. I used to do that a long time ago, but I don't really do that anymore. I'm now more of a buy and hold guy. I like to set my prices when I get in and get out. And then that's the other thing I'll tell you is that if you want to just kind of, again, outside of the trailing stop loss orders, which you put into place, right? Additionally, when you get into the stock, decide how much you want to get, what you want your return to be for that stock. So let's say you wanted to make 100% return, right? And let's say you bought in right here at 39.38. We'll do the calculator here. 39.38 to get a 100% return. We multiply it times 2. That is 78.76. So that would be your exit price. So you would say, okay, outside of when it goes up and goes down, if my trailing stop loss doesn't kick in, number one, and number two, it doesn't drop below the 50-day moving average, let's say it just continues to rise nicely, then you can know, all right, hey, I bought in at 38 and change, that, hey, 78.76 is going to be my exit price for 100% return on my money. It may take a month, 2 months, 3 months, it may take 6 months or a year, whatever it may take to get, but the day you get in, that your exit price. And so you could set 100%, 150%, 200%, whatever that number is, whatever you're shooting for, and however long you want to put your money into this particular stock. In this case, Adient. Okay, so that's a lot of information I just gave you, a lot of education I just gave you, but that's how you do momentum growth stock trading. All right, so let me show you my next one. I love this company, Avis. We all know who Avis is. Avis Budget Group. Ticker is CAR, currently trading at $85 and change. They're up about 2% today. 2.47%. I always flip those. It's weird. Been doing that forever. But you can see, look at the chart here. Okay, so you can see like right here. Look, again, green is your 50-day moving average. Blue is your 200-day. But look at this is a beautiful momentum growth chart. Look right here. Let's say you'd gotten in at 46. At $45. Look, it's all the way up to $85. Let's say, again, in that scenario, if you had said, hey, you got in at 45 times 2, well, $90 would be 100% return on your money. And you can see that would have happened in, if you bought in around, say, February 19th, right here, we're at April. So, you're looking at what, 2.5, 3 months to get in and to get almost 100% return on your money. And again, this stock is hitting its 52-week high, trading above its 50-day, and trading above its 200-day. This is a beautiful chart. I love this stock. I have owned Avis off and on throughout the years, and frankly, I hadn't looked at them in a while. This is one of the better ones that I've seen in a while. I mean, that's just a beautiful momentum trend line just heading up, right? And I think honestly, what you're seeing here is, look at all this flat right here. This was COVID pandemic right here, man, right there. That's what that was. Nobody was traveling, nobody was renting cars, and now you're starting to see the country's opening up. People are starting to travel again. It's April and March timeframe. Well, what's going to happen in May, June, July, August? Travel, right? Everybody's going to be traveling for summer vacations. Their profits are going to go really, really well. I think this is a great stock. This is a good one. I may even put some money in these guys. Okay. All right. The next one I've got for you is Eaton. Ticker is ETN. Currently trading at 143 and up just a little bit today. Similar scenario here. Again, to remind you, the green line is the 50-day, blue line is the 200-day, and you can see we've got a really nice upward trajectory momentum here. And I've already explained to you how to buy and sell, all that kind of stuff. We've already covered that. But again, you can see that this stock is actually really doing a nice job of channeling as well, ups and downs, but you got higher highs and higher lows. It's consistently moving forward. Okay, so that's your third one for today. So that's Eaton. Go check them out and run it through your own, run all of these through your own analysis and see if they fit for you. Again, 3 stocks that are doing really, really, really well that are not on anybody's radar. There you go. So let's wrap up with a few final thoughts. So I hope you've enjoyed the video. Basically, my goal is real simple here, guys, is to help you make more money in the market. That's why I put these videos together, especially this series. This is something that really no other YouTuber out there is talking about, and I wanted to just bring some different, unique value to you guys. And that's why I create and I do these series. So I hope you've enjoyed it. If you haven't already done so, subscribe to the channel. Please drop a like on the video if you got value out of it. Love to see you as part of my community here. It's what I'm doing, is building a community here on YouTube. I'll see you down the road in the next video. Take it easy. Bye.